My name is Rudi Deysel. I'm the MD CEO of Wits Mining. We are listed on the ASX, and our projects are primarily in South Africa, and we concentrate on gold production.
Really good to meet you. Good to meet you. We caught up with Michael back in July, and I think the sort of good news at that time was that the economic study says the economics have doubled, financing secured, and you're in that kind of operational transition phase. So I thought it might be good to kind of catch up and see how the execution side of things are going. So maybe we should. Maybe even should today get a little bit technical in terms of trying to understand what those operational priorities are with you. So with regards to the kind of underground mining, where are you at in terms of advancing the face rates at the moment?
Yeah, thank you, Matt. Nice speaking to you. So since in July, we actually started with mobilizing of our mining contractors as well as our EPCM contractors on site. For this project is a bit unique in the sense that we actually do the project development while we are producing gold ore, and that were really facilitated due to the fact that we already had a bit of a footprint there with our previous work in our early works. So that's everybody's quite aware of that. But since then, quite a lot of things happened. We've mobilized in July. We started with that. And the mobilization actually went over July, August, September. And we actually produced our first ore around the 14th of October. So that was the first physical blast and first transport of ore out of the mine. We had already a few stockpiles on site, which we also already moved to our processing plant at Ezulwini, which is done by Sibanye Stillwater. So currently, that's all on the go, and the team is hard at work.
Fantastic. Well, we like that, and certainly this gold environment, gold price environment. Can we talk about what are you kind of focused on the ground at the moment? I mean, obviously you're drilling and blasting, and you're having to sort of take care of business. But can you sort of talk about what the team is having to focus on when you kind of got this kind of dual track of producing and advancing?
Yeah, I must admit, I think, especially at this stage, when the working environment is quite small, and we've got not a lot of faces, because we are really opening it up, and we are at that phase where we are building up the production profile towards our steady state. The main focus now is to get the guys to really focus on the quality of mining. We've got to set standards and set expectation from our side. That's really the only way how you could actually create that sustainable mining environment. You need to have quite a strict procedure to fall into that mining cycle, and there's a lot of focus working with the guys on the face to fall into that, I call it rhythm, but almost in that cycle the whole time, to ensure that we are sustainable in our production, because that's the only way that you can ensure that you actually hit your production targets. So that's the main focus on the ground. We've done great work on the surface as well, where we started with our infrastructure. And once again, the big focus on the infrastructure side is that we ensure that we can have the services to be able to support that production profile. In other words, that the power profile builds up, that infrastructure is there, as well as all our service water, as well as our potable water. And then obviously all the other infrastructure required around that.
Right, and obviously, okay, you talk about the groundwork as well, but in terms of, you've got these kind of one west, one east, and main declines. How's the ground stability? Because I guess I'm sort of interested in this kind of spiral decline, to whatever it is, 800 meters or so that you talk about in the DFS. I mean, how are things going?
So the one east and one west is our first access to that early ore. And it's really, I guess it creates some flexibility, because it's really temporary declines. The intention is really to focus on the main decline. The main decline will ultimately be our main shaft, and that's where there will be that needs to stand up for a life of mine of 17 years. So there's a lot of civil works going into that, and obviously that's close to surface because that must be quite a nice hauling road to ensure that we've got that tramming quite in place. So the expectation in the planning is that the main decline will start off quite slower, especially closer to your oxidized levels, close to surface. And then there's a lot of civil work to ensure that we've got that proper permanent infrastructure whereafter the real advance will really happen. On the other two, we are actually quite advancing quite nicely on those, and purely because the ground conditions are brilliant. It's already in the fresh rock, and so the stability, we are pretty much in systematic support process. So it's all part of the production cycle.
Okay, and then how's the sort of drilling and blasting cycle times looking like? I mean, is it in line with your expectations?
Yeah, it's improving quite a lot day by day. Obviously, there's a bit of coaching and training that's required. The ground conditions a bit different. The guys had to learn how to install the support. It's always different once you start a new mines or new grounds, no matter where you are. But we are actually doing quite well. We are completing all our cycle times in a shift, which was always what we expected and required at this stage. But the expectation now is that it will actually even improve so that we can have that multi-end preparations during one shift. And once we get to a point where we can actually apply for multi-blasting, it means that we can double up on that production, and we are getting close to that point.
Okay, and what do you, obviously we're talking underground mining here, so in terms of ventilation, dewatering capacities, are they kind of lining up with, again, expectations in terms of timings?
So it's still very early stage in terms of our normal mine dewatering, because you will set it up in stages as per the levels that you open. Where we are now, we've got all our infrastructure in place for the dewatering for at least for the next 6 months. And then that will follow on as we hit the points, especially when we start going down and create the next levels. In terms of following our project plan, we've just done a monthly review, and I must admit, it's one of the best S-curves that I've seen. And the project is really following quite nicely, and we are quite on track with that. I guess from my point of view, what I would like to see is really just that the guys really have that culture, especially in terms of safety, and really start hitting their straps in terms of the production cycles to increase that efficiency and productivity. But things are really going well at this stage.
Because I think last time we talked about, with Michael, we talked about some mechanized mining in terms of that load haul, drill rig, fleet size, etc. in 2026. Are you kind of still feeling that is the way to go? And will you be able to kind of, again, give us an update on timing and delivery of that?
Yeah. Absolutely. So currently we only have a 7-tonner LHD underground, as well as one double boom drill rig. It's for the amount of mining that we're currently doing. It's fine. But next week we will actually receive our first truck, and then as well as our UV utility vehicles, which you use for construction. Now that will actually accelerate the whole process, and then suddenly you'll see a big jump in terms of tramming of material out of the mine. So we expect from next week on those production cycles will even improve much better than what we are doing currently.
And obviously, you're also doing sort of night shift operations there. I mean,
Yes.
That must be positively impacting the overall tons.
Oh, absolutely.
And helping you not just hit target run rate, but maybe even exceed them. So again, training's very important. in
Yes.
that? Are you finding the right people?
Yeah, so like any initial stages, it's and I think at the current commodity price boom that we see, and because we've got quite a strong platinum PGM market as well, and everybody is now looking for skilled people. So we are a bit in a bond fight with everybody for those skills. But at this stage, we really put effort in our recruitment process. So there's a lot of effort, and we work actually quite closely with the contractors to assist them as well. And and even get the specialized guys. We've got a few contacts, so you always try to get the people that you know and trust, and get them in your team. So that's a process. And then obviously the other challenge that you need to get onto very quickly is procurement. Lead times, to make sure that you get that material on the mine as quick as possible so that it doesn't influence your production.
Always, always. There's a lot of moving parts when you're ramping up and you're recruiting and you're trying to run some dual tracks of production and development. Things like grade control, drilling underground. Now that's and I guess reconciling what you're seeing versus what the model says. Can you just talk a little bit about how you manage that?
We actually had a bit of a discussion on that, and the fact that we had quite a bit of time to try to finalize our whole funding structure. It actually gave the technical guys a lot of time to work on the procedures and processes to get that in place up front. I guess another advantage for us with this delays was that during these due diligence processes, there were actually quite a lot of sampling happening and quite a lot of quality control situations where we need to really look at this quality and grade and make sure that we've got it in place, and even now tracking up to the plant and what's delivered at the plant. So the guys are actually already quite familiar with that. So it's one aspect where we feel, we are a bit ahead of the weight in terms of how we manage the quality control of the type of and grade control that we have, and our metal accounting. So that was one advantage.
As part of that process, are you sort of comparing that against the model that the resource model that you have, and can you give us any sort of insight into how that's evolving or how that's matching what you thought?
At this point, we are actually marginally above what we expected.
Okay.
So the things are quite good, but once again, the Witwatersrand Basin is probably one of the best understood ore bodies, given the amount of years that we've mined it, and a lot of the information of the old mines around us, surrounding us. And I mean, our neighbors, Harmony at Doornkorp, is still mining in those areas. So the geologists tend to be a bit more conservative. Sometimes with a new greenfields, brand new ore body, they think they are conservative, and then you end up actually overestimating. But in our case, I think we are quite confident in what we have, and so far all the sampling show that.
And just kind of sticking with the kind of the data gathering, because it gives data informs you. You can make decisions off the back of that. But things like whether it be there's automation or digital monitoring systems, that's related maybe to safety and efficiency and all of those good things. Are you slowly sort of working out what you need to implement, enhance what you've already got, and how important is all of that?
We've got a clean sheet of paper with this mine. So we've got that opportunity that we can really work with new technology from the beginning. For instance, volume scanning rather than the normal conventional survey work. For instance, our loading onto the trucks, we've got the load buckets and the sampling, electronic sampling system that we use. And obviously the guys do it manually as well, just as a check. So we try to ensure that we can do all of the work to make sure that we are within those delays and lead times, especially on the technical work with a relative small team. Another thing is vibration monitoring with each blast, just to ensure that we've got actually data available. We are working in an area with some people around us, so we need to ensure that we monitor whatever we do, that we really do it within the limits that we plan. And not only that, if you think just on South Africa, these mines are quite old, and they used to use compressed air and pneumatic drills, where we went totally with hydropower, and we could really begin immediately with that. And you find that if you've got new guys starting with these type of equipment, it's better to have a new guy than an experienced guy that's used to the old technology, which makes it actually quite easier to implement and to actually get the guys to that level that what you require.
And do you get any kind of power savings off the back of that, or even like equipment availability?
So there's a huge power savings on hydropower, and purely due to the fact that you don't have that efficiency losses,
right?
Which you actually have with leakages and that type of thing. We've got our hydropower. The power packs is physically at working, so you've got that at site increase in. So it's quite easy to solve the problem at point. And also make sure that you don't lose production. With a typical centralized system, you can lose the whole mine for that day, which helps us as well.
Yeah. Okay. It's just in terms. We can jump into a little bit on, because I think what I'm getting and what I'd like to continue with is just understanding the kind of execution and all these variables that you're kind of controlling as you kind of start up, because that's the interesting phase where you're tweaking and you're amending and you're chasing those efficiencies. So with regards to the kind of the tolling trials with Sibanye, Stillwater, Ezulwini, I think it is.
Yes, Ezulwini. Yeah.
Yeah, well, in terms of the preliminary recovery or throughput observations that you're finding there, what can you tell us?
We are not processing at this stage. The intention was always to build up a stockpile to a certain point. And the reason being is you would like to have a relative high grade. We do dilute in the beginning. We develop on reef, but because of the bigger excavations, you diluted the grade a bit. Now, at some point, as we start doing stoping, you will get better cleaner ore in that without dilution, which will increase the grade over time. And that will increase your recoveries. So that's why we always target the 30,000 ton stockpile, because then you get that point where you have your gold split is consistent and your recoveries are higher. Now, we actually did do some open cast mining where we also took out the same Kimberley reefs that we are targeting in this project, and the recoveries were excellent. Even with the bottle roll test that we done on the material that we currently have on the ground, we really get very positive recoveries, and even better than what we planned in our feasibility study.
And also, okay, so with the tailings then, also stockpiles, I should say, did you have to monitor things like, I'm thinking South Africa, it's always hot and sunny, but where is it? Moisture control and how does that affect grade control and what protocols do you have in place?
Yeah, absolutely. So obviously we need we get look, Ezulwini got SAG mills, and so they really require hard rock run of mine type of material, because that assists with the whole milling process within the mills itself, which requires that the material must be dry, little moist content, and then obviously we need to make sure that we don't have any carbonaceous type of material in that ore, because that can create preg robbing and that. So, like oils or anything in there. So there is processes and standard operating procedures that you need to train the guys, and you do a lot of visible tests with these guys to ensure that they do load these things quite nicely and stockpile correctly. So there are processes for that to ensure that we control this and minimize and improve any loss, or ensure that we don't have extra losses that we didn't plan for.
Right. Okay. And obviously, this will be trucked from you over to Ezulwini. Are there other alternatives? I mean, there's other operators in the area, Harmony, Pan African, etc. Are you in talks with any that would just give you some competitive tension or pricing tension?
Yeah, look. Obviously, we had a few informal discussions. Our intention is to grow. We want to, our aspirational production that we are targeting is 200,000 ounces per annum, where this project is really steady state is at 70,000 ounces per annum. And so
when do you think you'll get there, Rudi? Steady state.
So the next steps for us is we've got a few prospecting rights that are aligned to come into our resource. Now, once we get that, we will then really get with our level of study to almost that pre-feasibility definitive side, where you could actually then really do a design behind that. And that will require probably another year, but we've already started with that work. It's firming up that resources, get it into the system. With the current resource that we have, it already shows that we can handle that type of capacity. But once again, you really want to start design your infrastructure at the right places, and grow in the right direction in terms of depth, etc., and cost. So we reckon, in the next 3 years, we could actually, get to that point where we start with that type of development. And then obviously the other thing is looking at alternatives for processing, like you mentioned. At that point, we would require our own processing plant.
So between now and then, in terms of that ore blending and scheduling, to manage consistent feed grade, actually, can you explain to me because it sounds quite, we'll just blend it, but can you explain the kind of process of how you do that blending and scheduling?
We plan our actual mining plan is based on the actual resource, and we've got that understanding quite well, when and what type of grade we do get at what time. And, we do have models that shows that different grades and delivering that we have. And then obviously you've got the blending models and simulations to that point. And then at that point, once you get it out of the ground, you test that quality against those plant material. And then, we've obviously got also the ability to play around with our grades, what we deliver in terms of blending processes. So, that's all part of the production profile, and that's why you've got your mine technical services to manage that system.
But again, speaking with Michael back in July, I was speaking to the company. There was hope to kind of move towards this kind of 200,000 ounce a year production. Does it get easier or harder as the production ramps up with the blending and scheduling?
I think the nice thing about the Wits Basin is it's quite a consistent ore body. So, and once again, we know what's there underground. We've got that information, that historical data. So we will know what we get. I think then with those type of the real issue will rather be with getting the infrastructure and the capacity capabilities in time. That's the big thing building up to that point. So I don't think with blending the material or confidence in the material is a big issue. Is actually constructing this project and getting to that point where we can deliver that capacity.
Okay. Money, right? Like I said at the beginning, answer is fully funded, right? You kind of got this Nabari facility in there as well. You talked about 8-9 month payback. You got the money to do what you want, right?
We are fully funded to to get to our consistent production. We also have enough money to get us to that point where we can have our first drawdowns from our lenders. So in all practical reasons, the whole project is fully funded, for Carla Shallows. Now, if you want to expand, and you can just think from a capital point of view, new plant, some vertical shafts, it will be a much, much bigger project than what we actually have here, which will be a much bigger capital requirement, which will require that we somehow need to raise that at some point. But with this whole funding process and that we went through, the learnings from that was that people would rather fund a bigger project than these smaller projects, and we got through that, so we are actually quite confident. And then obviously you've got this revenue stream that you could also put in from your side, which at this prices makes sense.
I think it's timing. You went to people a couple of years ago and talked about big projects, and they say, no, we want a smaller project. And right now, with gold like it is, big projects are back in fashion again. But things that help is, one, that you're executing and you are producing cash. That helps. The other thing, I guess, looking at small things, like you mentioned and give us some clues already in this conversation, that maybe some of the numbers are kind of ahead of what you estimated, that you are overperforming. So things like you've got this 15% cost overrun contingency in there. Do you think you're going to need to use all of that?
Our big focus is to control our cash, and there's a lot of emphasis on that. We really, our biggest target is that all-in sustaining cost unit that we want to. I think the biggest problem is with most projects is once you start running into trouble, you throw bodies at that problem, and that's got a huge impact on your unit cost. And so we really focus on really get the principles right in the beginning when the project is still small, so that you have already that culture, and that is cost control, discipline in mining, discipline how you actually utilize and really don't waste money.
Well, I mean, there were some things out of your control, like diesel costs, I guess.
Yes,
labor,
absolutely.
competitive market labor is a tough one, and power rates. I think most people think of South Africa and power rates as a big variable, the unknown. But I guess the good thing is gold prices well above the DFS base case. So that really helps with things like debt repayment and restructuring options as well, presumably. I mean, just coming back to your point about maybe trying to kind of build big later. That's not saying, hey, we're going to go and dilute the shareholders with a whole bunch of equity. There are options in the market like this. I mean, what sorts of conversations? I imagine times like that. Not imagine. In times like this in the past, as an ex-banker, I'm going and offering guys like you money all the time because it's, make hay while the sun is shining, etc. So when do you start seriously having those conversations and considerations? Is it focused on execution phase one first?
We already have some of those conversations, and we've got a lot of people who are really interested in the growth, rather, which they would target. So for us, it's a continuous type of approach that we need to keep on the go and keep that momentum. So those discussions are already there, to be quite honest. I think the other thing is, once you prove yourself as a good operator and you deliver what you promised, then you really get financial partners that supports you. And I think that's our first thing that we need to get right with this project. And then the money will come.
I think it will. And I guess finally, just in terms of I know you're kind of execution mode, and yes, some development mode, and exploration is also part of the equation. But for the market facing information, things like a financial model update, is that something that you will do to incorporate the Nabari and production milestones, or is it a case of just kind of quarterly reporting will kind of cover that off, no official financial model update?
No. So we have like an annual process where we constantly do updates economically, technically as well. Obviously, your cost that we apply. So we are actually got this cycle that we go out quarterly and then annually. On our side, we would like to, not would like, it's part of our whole process to increase our reserve base as well and our resource, which then ultimately, as you get more information, confidence in what you've got, you add it to your model. So there's a constant working program on these financial models. And then obviously with new projects as well, we really try to get that on the go as well with that we've got a pipeline for our strategic growth.
Well, look, Rudi, I appreciate you giving us an update on where things are going. Obviously, moving along as planned. Maybe can we come back on? We can talk about growth next time around, which about Project T100 or building your own standalone plant and mine sequencing, so you can extend and exploration to expand beyond the current 17 years life of mine. Stay in touch. Let us know how you get on.
Absolutely.
Okay?
Absolutely. Anytime.
Cheers, Rudi. Cheers, Rudi.
Appreciate
See you.
it.
Bye.
Thanks, Matt. Yeah, cheers.